Hi everyone, today let's start off by talking about the VIX and seasonality. Then we'll talk about some new business plans from the biggest company in the world. Then I'll quickly mention Meta's new subscription service. Then we'll get into the economic calendar, we'll talk Max Payne and then the charts. And finally, we'll go over my results for the day and my thoughts going into the Tuesday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at this article, it says markets are too quiet, and then they mention here VIX seasonality. Current year, we're right on track with where we should be going into the end of July. You can see it tends to bottom, and then we see a rally on the VIX into September and October, similar to what we saw last year, where we saw the October lows being the most recent low. And then we saw a taper from there, and it does seem like we are on track for that to happen once again, at least from a historical perspective. And they mention here, don't get too comfortable. It does seem like the odds are pointing towards an increase in volatility, which again is in line with the seasonal trend. Moving over to Apple, they say they're going to launch an Apple Watch Ultra along with the iPhone 15 this fall. They're also expected to ship their new M3 powered laptops and the new OLED iPad. So Apple is launching an improved product line pretty much across the board. I wouldn't say the Apple Watch Ultra is a new product, but it is one that we haven't seen before. But it's really just an evolution of the Apple Watch. I'm sure there will be tons of demand for all of this stuff, as people really do like Apple, and they will be wanting the new products with the new features, and that M3 chip that they have been talking about is quite powerful. Moving over to Meta, they launched Meta Quest Plus, which is an $8 a month service for their VR headsets. Reality Labs has reportedly been operating at about a $4 billion loss for the company and only generated $339 million in revenue. Shares were down quite a bit at 3.5% today, and we'll get into the charts a little bit later, but it is interesting to see Meta trying to monetize VR a little bit more here recently. Everybody's focused on making money, and if they can make this product actually worth $8 a month, then maybe VR will have a little bit better guidance on the future. Moving over to smart money versus dumb money confidence, you can see we have a lot of divergence between the two. Dumb money is buying the rally. It is tapering here a little bit. Smart money is basically out, lower than they have been in quite a long time, going all the way back to July of 22. You can see we're much lower than all of those reads. Even in February here, we're below that level. And you can see when we get reads like this, similar to what we saw in February, we typically have at least somewhat of a decent pullback into a bottoming formation, and then we get a continuation type move. And then here in October, you have the inverse where dumb money is selling out, smart money is buying in, and then we get a move to the upside where we get the cross, and then we have a short-term top. Overall, you can see this is a very extreme read here on smart money versus dumb money, indicating that this is likely a top, at least in the short term. Looking at the economic calendar, we had the 2-year auction today, which came back way higher than expectations. 4.3 was the previous, and we ended up at 4.6. So really pricing in that higher for longer interest rates. Moving over to tomorrow, we have building permits at 8 o'clock, core and headline durable goods at 8:30, and then new home sales at 10 o'clock. Some pretty interesting data for tomorrow. Moving over to Max Payne, you can see we got all the way down to 431.74. These are the charts for the Friday close, where there's already 2.3 million options with a put-call ratio at almost 3, and we see markets continuing to fall. We're almost at that put wall at 430, 117,000 puts at that level, by far the highest strike compared to everything else we see here. Call wall is all the way up at 460, so not really a factor right now, but this is pretty interesting. If we see markets continue to dip well below this 430 level, I wouldn't be surprised to see a rally into the Friday expiration to make sure all these puts aren't making money. I still think a close between 430 and 440 does make sense for this week, and it's definitely something to watch as prices continue to go lower today and probably into tomorrow's session. Moving over to the charts, starting off with the S&Ps here on the hour and the 12-hour. You can see the 1 hour continues to be a downtrend. We're now below all the EMAs and SMAs on the 1 hour chart. So shorter term charts definitely showing downtrend. 12-hour chart, you can see we're just below the 9 and 21 EMAs, as well as VWAP. 55 EMA still sitting down at 426.53. If we did dip into those levels, got below 428.59 for a little bit, test that 55, kind of bounce in this zone, and then rally into the Friday close to get above that 430 level, definitely seems like a plausible thesis. Pretty extended here now on the MACD. We've had multiple sessions of downward price action. And it does seem like RSI is going to tick back up here at least a little bit, retest the SMA, and then we get that bigger continuation down, which would fit with the options market. Definitely something to pay attention to going into the Friday session, but right now everything still looks quite bearish. Support sitting down at 428.59. If we do rally, it's still looking at resistance up around that 437 area. Moving over to the NASDAQ here on the hour and the 12-hour, similar thesis to the SPY, but definitely looks more bearish. Had a big sell-off here today, down around 1 1/3%. You can see what that looked like, took out this previous low, and then it sold off very quickly. I was out of all of my positions right around that 360 level, and that turned out to be quite good as the market continued to shed off from that level. And that really protected me from most of these losses. Looking at the 12-hour chart, similar thesis to the SPY, looking at 353.23 as the next major support. I do have a level right around this 356.82 zone on my other charts. So for intermediate, that's what I'm looking at, 353.23. Shorter term, sitting in that 356.80 area. Similar to the SPY, downwards momentum, RSI getting a little bit extended from the SMA, looking for a bounce into that zone. And if it's going to happen, you really want it to happen from here. Moving over to the Russell and the Dow, you can see the Russell actually had a positive day. Big wick to the upside, sold off in the mid-session, expecting this to rally into tomorrow's session. This is still a rally retest of the 144 area, higher low setup, looking for a continuation type rally here on the Russell. Looking at the Dow, not much, basically sideways on the day. Tested the 9 EMA and then sold off. Support 335.91, tested that level and it held, and now we're back in this zone. You want to see it get above this trend line and start to push back up to that 339.11 area, but right now you're kind of neutralized at this area of highest volume. Moving over to ratios just for a moment. I talked about these in the Sunday video, but they are very relevant at this point. You can see NASDAQ SPY chopping at this resistance area, breaking down from that level. Similarly here on the NASDAQ Russell, breaking down from that key level. Clear double top forming here on both of these charts. And if this continues to break down, we should expect the Russell to outperform, at least in the short term. Moving over to Apple and Tesla. Apple sold off today. Through a wick to all-time highs, now currently sitting at 188.05, and then we got a big down candle below the 21 EMA. Again, could just be a pullback in a rally, but these rallies have been a little bit more muted over time. It does seem like this is going to break down at some point. Momentum ticking back towards bearish. We didn't even get into overbought conditions with this most recent rally, so we have clear divergence on RSI. And like I said, this looks more weak than it has recently on Apple. Tesla absolutely breaking down in terms of structure. This is now a bearish trend. 21 and 9 EMAs have inverted. They actually crossed back on Friday, and now we're moving back down well below the 55. And if these pull back all the way down to the 144 EMA, that would be a huge move down to around 108.82. Tesla was also downgraded today. I forgot to mention that in the news, but Tesla got a downgrade and it started to sell off pretty aggressively, took out all of these previous lows, and this is now making lower lows, and support is down at 323.84 for a potential bounce. I would be careful with that. It could certainly cut through that zone, and then I'd be watching 214. Tesla has been on a relentless rally, and it does seem like it needs some pretty significant pullbacks if this rally is even going to continue and look a little bit more healthy. Moving over to Microsoft and Meta, you can see Microsoft had its peak back on 15 June. Since then, it's been chopping in this consolidation, and if this starts to break down, you really want to see it get below the lows on the 7th, down around that 323.30 level. If we can get below that, then we're starting to make new lows. You could already argue that this is a lower low versus this previous low here, but really you want to watch this dip low down at the 7th, and that would also take you below the 144 EMA sitting at 324.50, and then you have the 200 sitting down at 315.84 on the 4-hour chart. Overall, structure is definitely flattening out. You have EMAs flattening. We're below the shorter term EMAs, and you want to be a little bit more careful here on Microsoft. Similarly, on Meta, you can see this consolidative period. Tried to rally on Friday, made new highs, and then broke back down to the previous lows from this consolidation. We're also right around the highs from 6 and 7 June, just like Microsoft. If we can take out these highs and we start to break down, that would establish a lower low, get a rally, a lower high, and then that structure starts to roll over here on Meta. Right now, it's still neutral, below the shorter term EMAs, but above the medium and longer term ones. But it does seem like this structure is starting to roll over. Moving over to NVIDIA and Alphabet, similarly to Tesla, both of these are rolling over pretty strongly here now. You can see this structure. We now have a lower low and a second lower low versus this initial dip, plus that high, lower high, lower high. So this is definitely trending down here on Apple. NVIDIA, a little bit tougher to handle. It is rolling over, clearly below all of the shorter term EMAs and plus the 55. So if it rolls all the way down to the 144, down at 360, that would be a huge move. At least down into this previous consolidation, 388 makes sense. But this has been such a powerful stock. I would be a little bit more cautious shorting this one, and I would look for stocks that look a little bit weaker. But it is interesting to see that this structure is starting to roll over at least a little bit. Moving over to staples and discretionary. Staples put in a second bottom here, so you have a double bottom at this point, looking to rally back above that 74. I might look to take a position in here just as a way to put some capital at risk. It does look good, and we have a clear higher low setup. Looks like we're going to rally back up into that 75.40 area. Definitely interesting here on staples. Discretionary looking very much like Tesla, as it is mostly driven by Tesla right now. Structure breaking down, making lower lows below the 55 EMA here on the 4-hour chart. Looking at 162 for potential support. Again, I wouldn't be surprised if that first level of support breaks. Looking back down to 153.03 as the next potential level. I also have this medium-term trend line sitting there just below support. Again, I would expect both of those to break, looking at 158 before we find any kind of real support. Moving over to energy and utilities. Both of these had good days today, so we're seeing a clear rotation into a little bit safer stocks. Energy gapped down onto the Friday, held in that zone, and then we rallied here today, getting above 78.47. This is still technically a downtrend in the medium term, but you can see we've had consistent basing in this area. This is also a higher low setup versus this low from May. It does look pretty good, at least a little bit better than some of the tech stocks. Utilities also looked pretty weak over the last week. But here today, we're rallying back up, holding at this 65.13 level, got up to my 65.75 level and paused right there, basically to the penny. So you want to see it get above that level before you look to enter and look for the push at least another $1 or $1.50 higher than we are right now. Again, looking at a low, higher low setup. And if this rallies and makes a higher high, then you could be looking back up to this previous consolidation, up around $68 or $69, which would be a nice little rally here in utilities. Moving over to transports. Surprisingly, transports was quite strong today. You can see this big push, higher high, definitely a positive day on transports. The Dow didn't really follow that. And honestly, this was stronger than the Russell as well. So very strange seeing transports go higher where the Dow was a little bit weaker. Could be an indicator that the Dow is set to go a little bit higher. And we're starting to see that rotation into the older economy. Certainly possible, but something to watch going forward here on transports. Moving over to the 2-year and the 10-year, you can see the 2-year continues to march higher. We had that auction today. The results were quite aggressive, which makes sense based on these charts. The more interesting point here is that we are not moving closer to reversion. Typically, you don't see the recession come until we've seen the yield curve revert. back to its normal state where you're getting higher yields for longer terms. We are still very inverted at about 1% between the two, which is interesting considering that most people predict that the recession is going to come towards the end of this year, and you would think that these yields are going to start moving in that direction, but that's definitely not what we're seeing quite yet. Moving over to the dollar here, you can see we had that rally on Friday, that breakout from this kind of double bottom. It was a little bit lower low versus this previous low here on the 15th, but we did end up rallying out of that area. There was clear divergence setting up on the 4-hour. We hit resistance and then sold off from that zone. And it does seem like we're starting to find a little bit of a rally from that 55 EMA, as well as this downtrend line that we drew off of this previous consolidation. We're back above that level, and it does look a little bit more bullish, going towards 102.98 and then potentially up to that 103.64 area. If that does happen, we should expect equities to continue to pull back versus the stronger dollar. Moving over to JNK and TLT, you can see this bar that we were watching in the Sunday video ended up being basically fake. We gapped down, chopped in this zone. We did get above 91, which was interesting. So this trend is still technically intact, and it could absolutely rally from here. This is basically the only thing that's saying we could get bullish prices. This and maybe transports showing a potential for more bullishness later in the week. TLT, on the other hand, continues to grind higher. Got above 103.70 just for a moment, and then we ended up selling off back below it. Still a bull trend, but moving up very slowly. Moving over to the volatility indices, you can see the MOVE index setting up a higher low. If this starts to rally back into this previous zone, that could definitely be bearish for stocks and equities. Looking at the VIX, you can see a gap up right to that trend line, chopping in this zone. If this gets above 1490 and holds in that area, certainly could look for a push up to 1850. That would be a huge move, and you would expect equities to be moving much lower. Momentum bullish, RSI bullish here on the VIX. So definitely a time to be a little bit more cautious, and it's in line with the bearish thesis pretty much across the markets. Moving over to my accounts, you can see I was down just a few dollars. I was out of my positions very early as we broke below my support. I was quickly out there, and then I did dip my toes in pretty much throughout the session, trying to catch some small moves here and there. I ended up with just one 355 put for tomorrow for 52 cents, which would be about another 1% lower than we are right now. It'd be a pretty significant move in my opinion after what we saw here today. I also sold a 180 put on the IWM, as I do think the Russell is going to outperform, at least in the short term. Just in a small $3 loss here, but it is up a little bit after hours, which is nice. And then I also put on a 181 call for $1 for Wednesday with those 100 shares, so that's a covered call. You can see I made a little bit of money in my IRA, not too bad. And then you can see about a 0.1% loss in my main account. Again, not too bad considering that the NASDAQ was down 1.3%. Let me know down in the comment section what you think about seasonality. Is the VIX going to bottom out here pretty soon and we're going to see a pretty aggressive rally in the VIX and then we'll see equities go lower? Or is this year going to be different? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.